Bitcoin just hit a new all-time high, and then it snapped back so fast, it gave us all whiplash. Now everyone is asking this question. Was this all just a trap? Or is this the final correction, the final dip before the next pump up? We know the price hit 124,128 at its peak. It then swung back down to around $118,000, all in less than a day. And for a lot of traders and regular everyday investors, this really stung. Personally, I'm calling this move an all-time high trap. And it's actually setting the market for one of the biggest moves we've seen all year. And if you know what's coming next, you can be on the right side of it. So in today's show, we're gonna dig into these numbers, into the data, and we're gonna break down what really caused this swing. And then also take a look at what this data tells us what's coming next in the market. So if this sounds good to you, let's get started. So before we look into where the market is headed, let's talk about why Bitcoin had such a sharp dip. July's producer price index didn't just come in high, it blew past expectations this morning. Economists were looking for a 0.3% month-over-month increase. And the actual number, the actual print came in at 0.9%, which is the biggest jump we've seen since March of 2022. Year over year, headline PPI was expected at 2.5%, and instead it landed at 3.3%. And then the core PPI, which strips out food and energy, was forecasted to come in at 2.9%, and instead it came in at 3.7%. So this was a real major upside surprise, and it puts the Federal Reserve in a tricky position now. And what's very interesting is that the CME FedWatch tool is showing a 94% probability of a September rate cut, with markets already pricing in 3 cuts for this year. Meanwhile, President Trump has been pushing for a massive 300 basis point cut immediately, saying it could save nearly $900 billion a year in interest if all debt could be refinanced at once, which of course makes sense since he is a businessman first, I would say. So it's really nice to see his skills coming into action in the best interest of America this time. Anyway, we know when inflation blows past estimates like this, it shakes up the entire playbook. People were ready for a mild print, mild data. And instead, they got triple the monthly rise they expected. That gets traders uncertain about the Fed's next move, and we know the market hates uncertainty. So now let's zoom out to see the bigger picture, because sure, the inflation data was bad, but the long-term outlook is still on a path to rate cuts. Meanwhile, Coinbase Institutional points out that over $7.2 trillion is sitting in US money market funds. If the Fed starts easing, printing money in September and October, those yields drop. And part of that mountain of cash could start flowing into risk assets. And we know, you would know if you've been here for some time, Bitcoin and crypto are often the first places, the first risk assets that receive all of this liquidity when it starts moving. Now let's talk about how Bitcoin reacted after all of this data hitting the market and what it means for us moving forward. Because before the print, Bitcoin ripped up to 124,128, and everyone was screaming new all-time highs on Twitter or X. And as soon as the breakout happened, traders piled in. Leverage started stacking up across exchanges, and social media feeds lit up with calls for Bitcoin to hit 130,000 and beyond. Then almost as quickly as it ran up, the price snapped back down to around 118,000 within the same day as the PPI data hit the market, hit media outlets. So you have to know that moves like this are not random. They clear out over-leveraged positions and shake out anyone who chased the top without a plan. So essentially, it shakes out the weak hands, as they call it, Those who are not going to be long-term holders and believers anyway, people that were easily deterred. So overall, it's a good thing because we need people who hold their assets and are long-term believers, because this is what ultimately secures Bitcoin's price in the long run. So I know that what just happened in the market, the quick flush, can feel absolutely brutal and can make you fearful of where Bitcoin is going next, especially if you're new. But it also tells us a lot about where the money's moving to next. And if you zoom out, you can see that short-term holders are not panicking. Actually, Glassnode's short-term holder, SOPR, which basically measures whether recent buyers are selling at a profit or loss, dipped slightly below neutral and then snapped right back up, showing their cost basis around 112,000 is holding firm. Now, here's the interesting part. Bitcoin dominance, which is the share of the total crypto market cap in Bitcoin, stayed around 59.4% during this whole fiasco. And normally, if Bitcoin's selling off hard, dominance tends to go up because alts drop even harder. But this time, the opposite happened, which is a signal that money's flowing somewhere else. And while Bitcoin's been whipping around traders and your everyday investor, Ethereum has been holding its ground near the cycle highs. That's an important sign. It means the bid under ETH is strong enough to absorb the volatility in the rest of the market. Because with the kind of flows we've been seeing, it makes sense. Digital asset treasuries, the corporate players buying crypto positions on their balance sheets, have been accumulating substantially. Bitmine Immersion Technologies has already purchased 1.15 million Ethereum with plans to raise $20 billion to buy even more. And SharpLink Gaming is sitting on nearly 599,000 ETH. In total, the top ETH treasuries now control roughly 2.95 million ETH, which is more than 2% of the total supply. The ETH ETFs are also quietly stacking, consistently taking in net inflows even on shaky market days. That steady demand is a big reason ETH hasn't given back much ground. And here's what really matters for your everyday investor and your trader watching the start of a true alt season is essentially this. Historically, the true ignition point has been Ethereum breaking convincingly above its all-time high and holding it. In 2021, that breakout was the spark that sent capital pouring into the rest of the market. And today, the altcoin season index is sitting just 39 out of 100, far from the 75 level that marks a mature alt season. So we know we have plenty of room to run. And until ETH clears its old all-time high milestone and dominance starts bleeding faster, we're still in the early rotation phase, and that's super important to know. Next, let's talk about rotation, because if ETH is the front runner, what's the bigger play here? We're not in a broad everything pumps alt season. The winners are going to be in sectors Wall Street already understands and wants exposure to. So think tokenization, stablecoins, and AI. The flows we're seeing now are concentrated. Capital is being deployed into areas that institutions can justify to their boards and to their clients. The data makes this very clear. The altcoin market cap has grown by around 830 billion since April, even before ETH surpassed its all-time high. During this time, Ethereum climbed from roughly $1,300 all the way up to a $4,700 Ethereum token. And Bitcoin's dominance has slipped from its 66% to about 59%. And there have been single-day ETH ETF inflows of up to $1 billion. This is not a broad market meltup. It's a targeted rotation. Now let's talk about Solana and Solana's breakout story, because we know it's one of the clearest examples of this targeted rotation. Solana's price tapped the $200 mark with a 16% daily gain, and it's holding near the highs while pulling in fresh capital. Critics, however, point out that a lot of this activity is driven by meme coins. But meme coins, we know, also bring in users, and users bring in liquidity. And once that liquidity is in the ecosystem, it tends to spill over into other protocols. So we see the fundamentals are lining up too. And we are seeing that the first US Solana staking ETF with the ticker SSK just hit a new all-time high in assets under management at $161 million. On-chain, Solana's DeFi total value locked, its TVL, has climbed to $11.24 billion, which is the highest since February of 2025. With Camino Finance, JitoSol, and Jupiter Exchange leading the charge. Institutional adoption is accelerating too. we see Bullish, which is a major digital asset exchange, raise $1.1 billion in its NYSE IPO and announced plans to migrate its core infrastructure to Solana native stablecoins for custody, payments, trading, and settlements. And in Asia, CMB International, a subsidiary of China's Merchants Bank with $1.74 trillion in assets, just tokenized its Hong Kong-Singapore Mutual Recognition Fund directly on Solana in partnership with DGFT and on-chain. That's a state-owned banking giant planting a flag in the Solana ecosystem. These moves are not isolated headlines either. They're evidence that Solana is becoming a serious layer 1 contender for institutional-grade applications. The ecosystem's speed, low fees, and developer traction are already well known in crypto circles. And now, major financial players are building on top of it, which creates a very different type of credibility and staying power. Solana's starting to look like Ethereum did in 2020. Back then, you had a wave of projects building, liquidity coming in, and suddenly the narrative shifted. That's what Sol feels like now, especially with these big ticket institutions planting flags on Solana's ecosystem. So here's the takeaway. That Bitcoin all-time high trap wasn't a trap. It was a move in a much bigger arena, a much bigger game. Money is flowing into Ethereum, selective alt sectors, and Solana's making serious institutional inroads. And even with all these bullish signals, it's still a market that can turn on a dime. Bitcoin's all-time high trap is the perfect reminder. Sharp moves up and down are part of the playbook. It's just how things go. And they're designed to shake and question your conviction. Are you a long-term holder, or are you just here and fearful and you're just gonna sell at the first sign of uncertainty? And then of course, I can't blame you if you do, because it takes time and experience in the market to know what you're looking at and to know what normally happens next and to learn to read signals. So I'm not judging you or making fun of anyone who did sell with this last correction, but I'm here to tell you what are the causes and the factors, okay, behind the scenes causing what we see on the charts. Anyway, if Ethereum stalls near the highs or Bitcoin dominance spikes again, the rotation we're seeing could slow or even pause. Another risk is chasing the wrong narratives. The data shows money is targeting very specific sectors. ETH-linked plays, Solana's ecosystem, tokenization, stablecoins, and AI, loading up on low volume, illiquid coins just because they ran last cycle is a quick, and quite certain way and recipe to lose capital. This rotation, this cycle is very selective. And as I've said in past videos, we are seeing a lot, our foreshadowing of what's going to hit the crypto market is being played out for us in the ETF institutional arena of the market. So that's what I'm trying to drive home here is in order to know what narratives are going to pump in the crypto market, I believe we need to be paying attention. And this is why I share macro news with you every day, Monday through Friday, because it's telling us what is coming to the crypto market. Anyway, I know the macro market and the macro conditions are a bit of a wild card right now, and that the Fed rate cut decisions are heavily influencing liquidity flows. And if inflation data keeps running hotter than expected, or if rate cuts get delayed, the wall of cash of money, this liquidity we're talking about in money market funds might sit still longer than the market is pricing in or predicting, which of course would slow the inflow of fresh capital into crypto. And then we'd all feel that across the board. However, with everything we've seen published so far in the media and in the news, it isn't enough to send us lower for now, but they are definitely warning signs to watch. So if you want to stay ahead of what is going to happen in the market, I welcome you to continue to follow my channel, because this is exactly what I break down Monday through Friday, as I said, in all of my videos. And I do it to help you. Because if you haven't noticed, I'm not selling anything on my channel. So I hope you gained value from today's video, and I hope you share it with a friend or family member who needs to know what's going on in a way that I explain, which I think is a little easier to follow than some of the other more alpha degen channels out there. But anyway, guys, that's a wrap for today's video. I love you very much, and I'll catch you guys in my video tomorrow.